Did you hear me correctly? $314 billion. That makes Musk officially the richest person in history since the like of Andrew Carnegie or John D. Rockefeller. What's up, apes? Welcome back to the 𝗙𝗟𝗡𝗚's daily podcast of the day. Hope everybody had a wonderful weekend and is having a good week so far, off to a pretty good start. If you're invested in literally anything, you're almost definitely off to a great start here this week because once again, the everything rally continued here into the second week post the election news. The election seems to be driving all of these asset returns, even though, in my opinion, a lot of them don't exactly make a whole lot of sense, but that's not what we're talking about here today. We are here to avoid the election as much as possible and focus on some actual stuff that's going on in the economy that we all care about and we can actually, do something about here today. So let's go ahead and talk about that stuff. First and foremost, the 𝗟𝗚𝗚𝗛 portfolio was up 1.43% here on the session today. Great session for the fellas. Tesla carried the team quite a bit. It was a very strong return, but we kind of saw strong returns almost across the board within the portfolio here today. I've been told I should probably stop naming our tickers on a daily basis because that's just basically going to reveal the entirety of the portfolio. But go ahead and subscribe to 𝗟𝗚𝗚𝗛 if you want to get in on all of the gains here with us. That does bring our annual return to over 20% for the first time this year. We are up 20.45% since the beginning of 2024. Meanwhile, the S&P 500 yesterday was up 10 basis points. The NASDAQ was up 6 basis points. The Russell 2000 was up 150 basis points, or 1.5%. Not that anybody cares, but the Dow was up a very nice 69 basis points. So all in all, good day for the fellas. It was rough out here for some of the big tech names, however, and that was really the only down bad segment of the market here today. Basically, the classic Mag 7 stocks. Microsoft down 1.07%, Apple down 1.2%, Nvidia 1.6%, Meta 1.05%. Just a couple ones that I'm seeing here. Broadcom down more than 2%, Amazon down 64 basis points. Tesla was up like 5% because fuck it, why not, I guess. But that's basically was the big market driver here today. So we cooled down a little bit from the ridiculous gains that we were seeing on a daily basis last week. Obviously, the 𝗟𝗚𝗚𝗛 portfolio didn't because we can't stop. We won't stop ever in our history with this new team of apes that I had to hire after firing the last group of them. So overall, very good session for the fellas. Now, breaking down into some of our banana bits here today, some of the headline news that we thought was important enough to bring to your attention, but I didn't care enough about to write about, at least today. This first one I'll probably be writing about tomorrow, to be honest with you, but the S&P 500 is officially at its highest valuation since April 2021 on a forward price-to-earnings ratio basis. So the dollar amount that you're willing to pay per dollar of expected earnings of the aggregate S&P 500 companies is at its highest level since April 2021. We all know what happened in 2022 and 23 wasn't exactly a super fun time to be in the market. So not necessarily saying that this is a defining forecast that that's going to be happening, but it is definitely one of those kind of concerning points that you just want to have in the back of your mind when you're making investment and financial decisions going forward. Meanwhile, Elon Musk doesn't give a fuck about investment decisions because this man has $314 billion. Did you hear me correctly? $314 billion. That makes Musk officially the richest person in history since the like of Andrew Carnegie or John D. Rockefeller. Both are estimated to be somewhere in the range of 320 to 370 billion at the peak of their wealth. And Musk is, the only one that even comes relatively close to that. We're talking about like 𝗟𝗟𝗡𝗚 levels of wealth at this point. If you don't know 𝗟𝗟𝗡𝗚, look him up. He spent like a decade he was the king of, was it Libya, I believe? Mali. I think he was the king of Mali, and he spent like a decade of his life just parading around Northern Africa and, parts of Southern Europe, just flexing how rich he was. So pretty sick life. I mean, that's basically what Musk is doing these days, right? But let me see if that updated at all after hours here. I don't know how the index works on Bloomberg, if it's something they recalculate every day. Holy shit! I gotta go ahead and change that in the piece because it turns out Mr. Musk is actually worth $335 billion. That is absolutely ridiculous. So that's roughly $112 billion more than Jeff Bezos is worth. And for those of us who aren't great at math, that is roughly so Elon Musk's net worth is equivalent to Jeff Bezos and Michael Dell combined. So absolutely ridiculous if you ask me. Mark Zuckerberg's in third place at $206 billion, Larry Ellison at $204 billion. He's the founder of Oracle, and then everybody else is below at $200 billion. What a bunch of poor bastards out there. $335 billion for Mr. Elon Musk. Wow. I'm going to have to change that, and I really hope I don't forget to do so after this video. Meanwhile, in some other wonderful news for the state of the country, private prison stocks are absolutely ripping because the Trump administration is appointing an illegal immigration hardliner, Mr. Tom Homan, to be the official border czar. Now, Tom Homan, probably don't recognize his name. You almost definitely recognize his face. He's the absolute legend behind a bunch of those clips that you probably see on X, YouTube Shorts, TikTok, if you have that spyware downloaded on your phone or anything. But hysterical guy, has some great videos out there. I don't know what his, policies like enforcement ideas are, but his videos are definitely hysterical. Okay, moving on down. This was a really cool stat that I saw today. Almost couldn't believe it. But how long would you guess that it took for the S&P 500 to earn its first 1,000 points? Like, what would be your guess right there? Well, it took about 70.1 years. Now, how long do you think it took to go from 5,000 to 6,000 points? About 7 months, or about 0.7, about 70% of a year. So what's 70% of a year actually? Is that like closer to 6? That's probably close to 7 months, but still, from 70.1 years to 0.7 years. That's how long it took for the S&P 500 to go from 5,000 to 6,000, according to 𝗟𝗟𝗡𝗏. Definitely go ahead and check out that chart because it's really interesting to see how ridiculous compound interest is. So the first 1,000, 70.1 years, second 1,000, 16.6 years, 5 years, 1.7 years, 3 years, and then 0.7 years. So pretty fucking ridiculous if you ask me. Moving on down below, I wanted to provide some links so that you guys, for those of you that care, can go ahead and track the House and Senate races that are still going on. Meanwhile, I hope everybody is thirsty out there because holy fuck, water desalination is absolutely through the roof these days. It's something that is not being talked about nearly as much as it should be, but for anybody who's worried about running out of fresh water or drinkable water on Earth, don't worry about it whatsoever. We're apparently going to desalinate the entire damn ocean by 2020, by the next presidential election at this rate. Finally, shout out to the 𝗟𝗚𝗚𝗏𝗡s. Tesla and Zillow shares have ripped through our price targets today. Zillow, well, they both did it a little bit earlier, but still, we wanted to hype it up a little bit more and just put it in front of you guys once again. So if you want to get in on the gains with 𝗟𝗚𝗚𝗏, make sure to go ahead and sign up. All right. Moving on down, let's go ahead and do our macro monkey, our main story of the day. This will be a relatively quick one, but one that I think is particularly interesting and important to track. I'm talking about all my dogs gotta eat, and I mean you guys, me, my actual dog, Gus, and basically everybody else. So, what's going on? Well, despite the everything rally that's going on in markets right now, it's not necessarily reflective of the actual conditions on the ground. And I'm not talking about broader macro conditions, those are still great. I'm talking about microeconomic conditions, the actual, economic forces that consumers are feeling on a daily basis that drive their decision-making, particularly around spending. Now, one great way to look at that and kind of track consumer spending and where it's going, much better way to do so than something like the Michigan Consumer Sentiment Reading or really anything like that, is seeing how consumers are actually spending their money. Now, a great way, obviously it takes a lot to say like, okay, how are all consumers spending their money? Like what's the breakdown across different spending categories? So what we did to get a sense of how kind of, how thrifty consumers are feeling right now versus how, willing to just kind of throw bands consumers are right now, we went ahead and we took a look at restaurant earnings. So restaurant spending is kind of a high beta spending category for consumers, meaning that it's something that will ramp up when, good times are expected. If you win like $1,000 in like the lottery or something like that, one of the first things you're probably going to do is go to eat and celebrate. But at the same time, if you are expecting economic headwinds to come, if you're expecting, harder times going forward, one of the first things that you'll cut to start saving a little bit more money, if you're not a complete moron, is going out to eat. Now, so if we take that and we kind of extrapolate that to the broader economy, if everybody in the economy is stopping going out to eat, that is kind of a telltale sign, consumers voting with their dollars, that they expect economic headwinds to come going forward. And that is exactly what we are seeing, unfortunately, in the U.S. economy right now. Let's go ahead and talk about some of those numbers. So the restaurant industry, very difficult to size up in its entirety because these things range from, the scumbag food trucks outside the heart of the, local bars in the middle of your city, or all the way up to, Ruth's Chris Steakhouse, to Capitol Grill, to whatever other nice places there are, So it's a big, very broad industry. Is a hot dog stand, do you count that as a restaurant? Is a hot dog a sandwich, by the way? Let me know what you guys think. Shoot me an email, david@wallstreetoasis.com. But According to the National Restaurant Association published through Axios, the expectations are for the restaurant industry total sales to grow to about $1.1 trillion in 2023. So that's a relatively healthy growth. We've seen consistent growth from 2020 so far. So at the kind of headline level, not super concerning. Now, I would like to see these numbers on an inflation adjusted basis, but still on a real basis, relatively healthy, or on a nominal basis, relatively healthy growth. Nothing too freakish or nothing too concerning to worry about. So what we want to do from there is go ahead and look at some of the, most encompassing restaurant stocks in the United States. What do I mean by that? Ones that kind of run the full gambit from, the McDonald's and the Dunkin' Donuts of the world all the way up to the Ruth's Chris and the Capitol Grill. And it just so happens we were able to do so with just 3 companies here. So starting off with the parent company of the great and wonderful brand Outback Steakhouse. This is Bloomin' Brands. Bloomin' Brands reported their earnings yesterday, and that's what kind of got us thinking about this as a story, because the stock completely fell apart on those earnings. So it's not just the parent of Outback Steakhouse. Bloomin' Brands is also the parent of Carrabba's, Fleming's, and Bonefish Grill. Now, pretty much all of these are relatively, casual dining places. It's nothing super fancy. I personally wear a tuxedo every time I go to the Outback Steakhouse, but that's just out of respect for the institution, as I think everybody should. But overall, that is kind of what we're talking about when we look at Bloomin' Brands here. So looking high level at the sales numbers to get a sense of consumer demand for these brands and for spending at restaurants, we can see the total sales in the United States fell 1.5% in the quarter ended September 29th compared to the same period for 2023. So pretty rough showing off the top already. So down 1.5% in its entirety. Outback sales fell 1.3%. Carrabba's was down 1.5%. And Bonefish Grill completely crumbled 4.2%. So very tough scene. All of them were down except for Fleming's, which is the priciest chain out of all of them within Bloomin' Brands. That was up about 1.2%, but if you adjust for the 1.5% PCE inflation that we saw during the third quarter, so not monthly, but the quarterly inflation rate, we get a negative 0.3% was the growth rate, because inflation for the third quarter by PCE came in at about 1.5%. We subtract that, we get negative 0.3. So on a real basis, all of these fell, and basically the same is true for Darden Restaurant. So if we look at Darden, this is one of the largest restaurant purveyors in the United States. They own esteemed locations such as Olive Garden, Longhorn, Yard House, Ruth's Chris, Capitol Grill, bunch of others. They just bought Chewy's Tex-Mex, which is actually fucking gas, and I did not think that I would like it at all, but definitely go ahead and try that out. Chewy's is not necessarily incorporated into their results just yet. Ruth's Chris, which they bought in April of 2023, is not being incorporated in the same store sales figures, so we ignored the same store sales figures just because of, those huge acquisitions and the impacts that they could have to kind of disfigure exactly what we're looking for here, which is once again the demand for restaurant spending among consumers. So if we go ahead and take a look at these brands, Darden reports it a little bit strangely, but total sales at Olive Garden down 1.5%. Sales at Longhorn Steakhouse up 6.5%. That was up 6.5%, by the way. Fine dining segment, so this is Capitol Grill, Ruth's Chris, and Eddie V's. Total sales are up 2% year over year. And their other brands, which include Cheddar's, Yard House, Bahama Breeze, and something that I can't really read right now, but that was down 0.7% for the year. Now, if we're talking about operating profit margin, we saw a decline at Olive Garden from 21.4% to 20.6%. That's a 0.8% decline. Basically flat at Longhorn Steakhouse, up 0.4%, down a full percentage point in the fine dining segment, and then flat in its entirety at 15.1% in both years for the other segment. So to recap there, we are seeing increases at Longhorn Steakhouse, and that is basically it. We saw actual decline, nominal declines at Olive Garden and in the other segment, and we also see a real decline if we, factor in annual inflation with the 2.3% PCE data that we're seeing. So that is down about 0.3% for the fine dining segment once again. So Longhorn was the only top performer, but overall, the big takeaway here is to focus on the fine dining segment. Now, growth was a disgustingly abysmal 2%, and there was 1% drop in net margin. So this implies that ingredient, material, and wage inflation has increased to a degree in which price hikes can't compensate. Now, that's a particularly bad sign, given that these are fine dining establishments, because your boss that's eating at these fine dining establishments, generally it's pretty easy to digest those price hikes, no pun intended, by the way. But so the fact that these price hikes can't compensate for those increases is a pretty bad sign for that demand in this sector of the economy overall. So let's go ahead and look at the exact opposite sector, Restaurant Brands International. This is a purveyor of four quick service, fast casual, fast food places, if you want to call them that, with your disrespectful ass, because this is Popeyes that we're talking about here. Popeyes, you take your time. You take as long as you need to make that chicken as good as you do. I will wait all fucking day. But at the same time, they also own Burger King, which should, if we want to do something good for the United States, we should burn down every Burger King location from sea to shining sea. But the biggest problem in Restaurant Brands International's earnings is first and foremost, the biggest problem is that we spent $2.8 billion at Burger King last quarter. But the big problem, the really big problem, is that real sales declined across all of these brands. And this is, once again, the fast food segment. So we saw a 1.19% increase at Tim Hortons, which is like a Canadian Dunkin' Donuts, from my understanding. I think they have a couple locations in Buffalo and allegedly in the Northeast, but I'm in Massachusetts and I don't see any one of these around here. Burger King sales were down 1.6% on the year, thank God. Popeyes sales are down 0.72%, and Firehouse Subs down 1.31%. Now, I can understand Firehouse Subs when, if there's a Firehouse Subs in New Jersey, Mike's next door, we know where literally every human being on earth is going. But still, seeing these declines in sales across mid-tier, across fine dining, and across fast food restaurants is a pretty bad sign for the American consumer. Once again, this is a very high beta spending category, so it's going to change quite a bit. It's going to fluctuate more than the overall macroeconomic conditions and the microeconomic conditions that each individual consumer is facing. But still, when we take this stuff in the aggregate and we see this played out over the long term, that is a very bad sign, especially for the U.S. economy, which is very consumer-driven. Roughly 2/3 to 70% of GDP is going to be driven by consumers in any given year. So if we stop spending at these high beta categories, we know what's coming next. It's going to be those lower and lower beta categories, especially right now where we're seeing the personal savings rate starting to decrease and credit utilization and defaults are increasing at the same time on a personal basis. We're seeing decreasing defaults on a corporate basis, but for consumers, they are still increasing as of the last data that I saw. So overall, not a great time for the U.S. economy. Now, risk assets are still completely ripping in the kind of post-election euphoria that they're feeling right now, but that is not always going to be the case. Now, once this wears off, it's going to be back to basics, like what's actually going on with the consumer. I cannot wait to get Bank of America's consumer checkpoint for the month of November. I thought they were going to release it today, but it's Veterans Day, which, by the way, thank you for your service to any veterans watching this. But I really hope they release it tomorrow. So that would be a lovely surprise, because I don't know what else I'm going to write about in the Macro Monkey. Plus, I want to see what's actually going on in the consumer. So go get drunk, go clog your arteries. Your country needs you. Uncle Sam needs you to get fucked up and go have a heart attack. All right. So go do your part. The economy needs you. Okay. Let's go ahead and move into our big stock movers of the day. So the first one that we have, our first what's ripe stock, or should I say stocks of the day, we're focusing on digital asset or crypto stocks. I can say crypto in this video without getting, if I say crypto once, our open rate is going to go from 65% to 10% maybe, because, all of these email backend systems are going to block it out because they're going to think it's a scam. It's the Daily Peel. Give me a break here. Largest media organization on the entire planet, but whatever, to each their own. Anyway, for our first What's Right mover of the day, once again, we have crypto stocks, and we're focusing specifically on Coinbase, MicroStrategy, and Robinhood. Coinbase was up 19.76% on the day. MicroStrategy was up 25.73%, and Robinhood was up 7.40%. Now, this is an election-driven rise that actually makes a little bit of sense, if you can believe it or not. So, the basic idea here is that once the Trump administration takes over in January, SEC Chair Gary Gensler is Adler. Gary Gensler is the Osama bin Laden of the cryptocurrency space, and I don't think that that is an overstatement by any sense. He has been a regulation by enforcement kind of guy, and that is the absolute worst thing that you can do. It's like, imagine living your life and you have a cop, living your life, you're never told what the laws are, and you just have a cop following you around constantly, and then anytime you break law, he's like, all right, you're going to jail. That's essentially what Gensler is doing to these digital asset and crypto startups. Doesn't make any sense. It makes it an incredibly challenging operating and legal environment for these companies. Very much dramatically slows down progress without really any necessary reason besides potentially just wanting to, find these companies as much as possible to increase the SEC's budget. But the Trump admin has come out and said that, quote, on day one, Trump is going to fire Gary Gensler. So the crypto bros are very fired up about that. Hester Pierce, who is a current commissioner in the SEC, and I believe a conservative commissioner, probably because it's Trump. But they're saying that Hester is currently at the top of the list to be Gensler's replacement. Bitcoin hit a record high here today. As I was writing this, it was 10:40 a.m. and Bitcoin had hit $84,254. Let me go ahead and check what it is right now. Oh, I didn't do a timestamp. Today is Monday, November 11th, aka Veterans Day 2024. The bond market was closed today, but the stock market was open. It is now 6:38 p.m. and Bitcoin is at, holy shit, $88,753.17. So I'm going to go ahead and change that at the same time. So I have a couple of things to change. Now, if you read the Peel tomorrow, well, if you read it and you watch this and you don't see those changes, my bad. I'm sorry about that. Anyway, moving on down into our second What's Right mover of the day, we have bank stocks up 2.84%. If there's one thing that a businessman doing business appreciates, it is another businessman doing business, as long as they're not in the same industry, of course. And that is exactly what bank stocks said on Monday. They said, a businessman doing business is back in the Oval Office. We are businessmen. That means we are going to get back to doing business. So bank stocks, this one was real simple. It's the expectation for less regulation as well as more M&A activity now that walking 𝗟𝗟𝗚𝗛𝗃 is going to be booted out of the FTC. Naturally, Wells Fargo shares were up the most because these guys were acting as if that regulation didn't exist anyway. So that stock was up quite a bit for the session. Let me go ahead and check exactly how much it was up. 3.63%, but the actual asset that we're looking at here for the piece is Bank Stocks ETF, KBE, up 2.84% for the day. SoFi shares, I believe, were up way more, around like 10% or something like that, but I might have to double check. Let's go ahead and move on to What's Rotten because we're already more than 20 minutes into this. Our first What's Rotten name is we have Monday.com. Monday.com shares were down 15.14% on Monday. This company, by the way, always reports its earnings on Monday, which I think is pretty fucking cool. I don't know if they do that on purpose, but it's just something I've noticed after writing this for 3.5 years now. So it's a pretty interesting aspect of it. But Garfield was absolutely right. Everybody hates Mondays. He was the top market forecaster for the session because everybody, in fact, hated Monday. The company came out and they reported earnings that actually beat expectations for the current quarter, but a slight miss on guidance brought shares down. So the company actually raised guidance for fiscal 2024 revenue, but the guidance that they issued for Q4 revenue was slightly below. When I say slightly, I mean like $600,000 below the midpoint that the market was expecting. Now, usually that's not going to be like a horrific 15.14% decline, but when you are Monday.com and you trade at 397x trailing 12 months PE ratio and a 113x forward PE ratio, your results, with great valuation comes great responsibility. It's kind of like the Spider-Man idea of markets here. So those results didn't live up to the valuation in the market's eyes. Finally, we have Taiwan Semi, TSMC. In other words, shares were down 3.55% on the day. They got some bad news, I can't even lie. So Taiwan Semi, they woke up, well, I guess really went to bed because that's, either way, on Monday morning in the United States, one of the first things that happened today is the White House woke up and decided to choose war against TSMC. They basically came out and said that they are going to be banning all exports of, quote, AI chips from TSMC into China. So the United States doesn't want TSMC supplying China with advanced technology or advanced microchips, and the U.S. is able to do this because of because the United States is because they're the top dog. Now, if you go and ask Perplexity AI why they're able to do this, it's going to list out at least a dozen reasons why they're able to. The basic idea is that a lot of what Taiwan Semi does is based on American technology, and so if Taiwan Semi starts acting out of American interest, we can pull that technology from them. So they're kind of, in our pocket in that sense, or holding on to our pocket, if you know what I mean right there. But once again, shares down 3.55% because they can't sell AI chips into China. In 2023, China made up about 12% of the company's total revenue as well as their total operating profit. Now, they're still able to sell some chips into China, just not the ones that are actually there for growth. So, China's basically going to be a declining market going forward for TSMC, and that's what the market seemed to say on Monday. Okay, moving on into our last portion of the day, our Thought Banana. We were talking about Trump's first war. Now, Trump got a lot of credit during his first term for not starting any wars. Well, I don't see that happening in his second term here. Now, some of you, if you're a history buff out there, you might know this, but on May 22nd in 1856, South Carolina Representative Preston Brooks attacked Massachusetts Senator Charles Sumner. I was going to say Daniel Sumner, but Preston Brooks, representative, attacks Senator Charles Sumner on the floor of the Senate chambers with a metal-tipped cane. He broke his face, broke his nose. He was all bleeding and shit. This is really the first bloody, violent episode to happen in the U.S. Senate chambers. Now the Federal Reserve is going to be the next one to step into the octagon for this coming administration. So after appointing and confirming Fed Chair Jerome Powell, aka 𝗟𝗡𝗚, back in 2017, Trump made 𝗟𝗡𝗚's next couple of years very similar to, my sophomore year of high school. It was just nonstop bullying constantly, and it does build quite a lot of character. So, I'm sure Powell wasn't too mad, even though by the latter half of 2019, now keep in mind, this is about 2.5 years after Powell appointed him and said he's the best guy for the job, or after Trump appointed Powell and said, he's the best guy for the job. 2.5 years after that, Trump was actively tweeting if Jerome Powell or if Chinese President Xi Jinping is a greater threat to the United States. So you could say that relationship didn't exactly go too well for very long, like most marriages, if we're being honest. So really, nothing exceptional there. But we expect a full-on fistfight between these two. Many of you probably saw that press conference last week where a reporter from, I think it was Bloomberg and then Yahoo Finance, were asking Powell if he would step down if Trump asked him to. He said no. They said, do you think the president has the legal right to demote or ask you to step down? He said no. That was the exact quote. And then the Yahoo Finance person said, has the Fed considered the legal implications? 𝗟𝗡𝗚, he is a trained lawyer, so I'm inclined to take his word on this. And he said, quote, not permitted under the law. It was an absolute beast of a session. 𝗟𝗡𝗚 going full big dick energy on there, and we absolutely love to see it. Big dick energy in that sense, and for my portfolio, which is always the best combination. So I cannot stress the importance of Fed independence. It's great that 𝗟𝗡𝗚 said no, not legally or not permitted under the law, because it's clear that he understands the importance of Federal Reserve independence. If the central bank was not independent, if the president was allowed to kind of influence interest rates or monetary policy more broadly, they could simply, for example, right now, the October jobs report was complete shit. We have slowing GDP rates, even though it's still pretty good. If President Biden was considering running for a second term, or if Kamala Harris was smart, what they could have done, and if the Fed wasn't independent, what they could have done is, just say, Powell, I need you to lower rates. I need you to increase asset purchases. I need you to just spur growth and employment in the economy so that when the election comes on November 5th, they can say that they have good numbers backing them. Now, we can see how easily gameable this is for short-term political benefits, taking away from the long-term economic stability that the Fed is supposed to institute by controlling prices and by maximizing employment. So we can see that this gets pretty thorny very quickly, but hey, I'm low-key all here for it, because on Friday of this week, we have the Tyson-Paul fight, and I'm sure Ted Sarandos and the rest of the Netflix organization, along with Dana White, would be very interested in putting together a Donald Trump versus 𝗟𝗡𝗚 fight. Now, they're willing to let, 55-year-old Mike Tyson fight 12-year-old Jake Paul. Sorry, that's just how old he seems. What is he, 30-something, and still can't put a full sentence together from what I've gathered from his quote-unquote content. But anyway, the real point is I think it would be even better to get 78-year-old Donald Trump and 71-year-old Jerome Powell in there and just fucking see what happens, dude. Oh my God. The rounds would last 5 seconds, and I still think they would both have heart attacks. But that's about it for us. Our questions of the day: is Trump actually going to try to remove or demote Powell? What impact will that have on markets if there's an active fight going on between the president and the Fed chair? Probably not great. And who would you put your money on in a UFC fight between Trump and 𝗟𝗡𝗚? My money is on the young buck. I will take 𝗟𝗡𝗚 all day long. Speaking of 𝗟𝗡𝗚, we'll finish up with a quote of his for the day. He once said, quote, "There is no risk-free path in monetary policy." Can you guys hear my dog running out there? If you can, just know that he is chasing his tail, and he has a cone on his head that he has been wearing for about the past week or so now, because he just got fixed finally, and he's going to keep wearing it until Thursday of this week. So yeah, he's having a rough time. So I'm just glad to hear that he's got a lot of energy back, because he's also on a ton of drugs, which low-key makes me very jealous. But anyway, we'll leave it there for the day. Guys, thank you for tuning in once again. It's 6:47 p.m. I gotta go change that stuff before I forget. But either way, appreciate you guys. Love you guys. Happy investing, happy trading, and we'll see you tomorrow. Bye now.